Hello and welcome to our webinar today on the recent PPP updates. My name is Johan Kolvik. I'm the co-founder of More Reporting. And with me today as well, I have Sofia Carreno. She will be helping out with polling and questions and so forth. If you have questions, please ask them in the Q&A. There are going to be different points throughout the presentation where we're going to stop. We're going to have a poll, and we're going to be handling and answering questions at that time as well. Any questions that we might not be able to answer during the webinar, we'll make sure that we get them send a notification to you afterwards. So don't worry if we don't take up your questions. I do expect that we are going to get a lot of questions about this simply because it is very new. But let me start out here by sharing my screen. Good, you all see my screen? Sophia, nod if you can see my screen. Yeah, good, so we're good to go. So we have our first little disclaimer here that we're not giving any financial advice and so forth. And let me just start the presentation up here. There we go. Now we're in present mode. Good. So right before New Year's on December 27th, the president signed the Consolidated Appropriations Act 2021 into law. And a part of this law, which was very long, 5,593 pages, part of it around page 2000, we have the Economic Aid to Hard-Hit Small Businesses, Nonprofits and Venues Act, which the SBA shortened to the Economic Aid Act. Then last week on Wednesday, 6 days ago, the SBA released their guidance interpretation of the Economic Aid Act, how this is going to work. However, they didn't release all of it. There were some parts that they were required by law to release within 10 days, and there are other parts which they are required by law to release within 24 days. So we have only received a part of the package yet, and I am still expecting that we are going to see clarifications to that because there's a lot of questions that came with what they have made. And we're going to handle some of these questions here today. Good. Changes to round one, PPP first draw. Well, it's been reopened, meaning that people who have not yet received money from PPP round one, they can now apply for it. If you already received money from round one, you cannot apply for round one again. So it's kind of blocked that way. But it is possible for anyone who haven't received funds yet to go and apply for funds from round one. And that follows mostly all of the rules that there were from round one so far. The deadline for this is March 31st of this year. Now, one of the new things is it can be based, if you remember, the loan amount was based out of the monthly average salary multiplied with 2.5 from 2019. Now, if they apply for this round one now, they can actually, and haven't applied before, of course, they can actually use now the 2020 figures. So that's one of the new updates there. We also know that there's going to be simple forgiveness. We don't have the details of that yet. That's one of those elements they're first going to release after 24 days. And they also have some new expenses that the money can be used on, besides the rent and salary and mortgage utilities that was previous. So some of the new expenses are operation expenditures, like software, cloud software, accounting, HR is a part of that as well. Property damage costs due to public disturbances over the summer. That's actually what it says in the law. Supplier costs, orders that might have been submitted prior to taking the loan. So if you if you're ordering supplies that you no longer need it, you can now use the proceeds from the loan to pay for those. And also worker protection costs, PPP, remodeling, restaurants for safety, putting up plexiglass, whatnot the money can be used for that as well. I'm not going to talk a lot about it more than this because it's actually very, very rare. Even we see loans where we need to go in and look at rent to make sure we can get maximum forgiveness. But you know, they are probably out there, and there are some that you can use these money now, and there's more flexibility to it. Good. Let's run the first poll, Sophia, and we also have some questions. I will stop sharing the screen here and look at some of the questions here.
Perfect. Running the poll right now. The first question that we have is there a deadline for the forgiveness application for round 1?
In reality, I'm not aware of any deadlines actually, but 10 months after the covered period is over, then interest begins to happen. So there's kind of a 10-month period where you can apply, where the borrower doesn't have to pay any interest of the loan. So it's generally those 10 months that is going to be. I also see another question here. I'm going to send a PDF of all the slides out. I might include some of the law texts as well, simply just in that. But all is going to receive a PDF of these slides after the presentation.
Perfect. Another question, can these new costs be used on forgiveness of round 1 funds, retroactive, or only for the round 2 funds?
They can be used on round 1. They can actually both be used on round 1 and round 2, so they are retroactive, these new expenditures. Good. Let's end the poll. And then we will share the results right there. We got one more questions, but we can see that a lot of you actually have quite a few of clients who already received the PPP loan. We have none who have answered zeros, and that is 5.3 million businesses received a PPP loan, and the SBA actually released all those names with how much they got exactly in loan as well. Good. We have a question more here.
What are examples of operational expenses? You said accounting. Would that just be for accounting software or accounting services too? And would it need to only be for new services or existing previously? What are other examples? Seems kind of vague.
Well, that might be a little bit my fault that it seems vague, because I tried to shorten it down a little bit. But for accounting software and accounting services are definitely included. I'll make sure when I send out the PDF that I send out a more detailed list of what the funds now can be used on. I'm just writing it down here. Funds. Then we have another question here. I have a client that received a first draw PPP loan and submitted the loan forgiveness on the 7th of December last year. The forgiveness application is currently under review, and the SBA has not yet remitted the forgiveness process. The client have requested partial forgiveness, and his total eligible expenses fell short of the loan amount. With the passing of the Economic Aid Act, he might have additional eligible costs. Is it too late to amend the forgiveness application to include these costs? As I read the Act, he should be able to go back and amend that application. And it is actually, now that we bring this up, I've talked to a few banks, and about 4%, 3 to 4%, it seems to be, of all forgiveness applications get submitted to a review. Now, the logical thing would be if they took the bigger loans and submitted them heaviest to reviews, but they're actually doing it all over the place. I've heard examples of loans down to $5,000 that were submitted for reviews. that they have to then submit all the documentation that you are required to retain for the, well, now shorter period of 3 to 4 years, but that they had to submit all of that. I've also heard of multiple examples where they the 3 months are up. So this guy you had here who submitted the in December, beginning of December, it might be a few more months before they get any reply. I've heard from banks that they are so frustrated with it that some of the smaller banks are considering not participating in the second draw. So that's just a little bit of bonus information here. Good. That was all the questions for now. So I'm going to go back to sharing my screen. And then here. Good. Let's look here at the simple forgiveness for less than 150,000 that we know is coming. What it says in the law is it's going to be a one-page form. The SBA can only ask the borrower to provide number of retained employees, estimated amount spent on payroll costs, and the total loan value. That's actually what it says in the law. You can go in and look at it. I was pretty surprised when I saw this. They have to attest that they accurately provided the required certification. I don't know what that means. We're going to see what the SBA is making out of that. And that they complied with the requirements under section 7A36. Finally, they have to retain records to prove compliance, 4 years for employment records and 3 years for all other records. And you can find that in page 2056 to 2057 of the Consolidated Appropriations Act. Now, when I looked at that, I had a couple of questions. First of all, payroll costs. So what about rent, mortgage, and all the other expenditures that we now can put in under the PPP? How is this form going to handle partial forgiveness if you can only put in payroll costs? I think there's a chance that the SBA is going to say, you know what, Congress, you might have written that we can only ask for payroll costs. We're going to ask for the other ones as well because it doesn't make any sense. And that's we sometimes see the SBA have done that in this process, is that, for instance, in the Flexibility Act, there were some things that the SBA said, you know, this is very good, but we're going to interpret your text differently than what you actually wrote because it is more in connection with how the rest of the program works. Then we have this section 7A36. It's actually referring to 7 pages of the CARES Act, which is all of the requirements for the PPP loan. So you might have to attest that you are compliant, but how can you know that you're compliant if you haven't gone through the entire process of collecting all the documentation and doing all the calculation? Because you have to retain the records and prove compliance. How many audits are the SBA going to conduct? So I don't know what the SBA here is going to do. Maybe they're going to say, you know what, we're going to extend the S form to go from 50,000 to 150,000. That would be nice because it means that they would remove requirements for FTE reductions and salary reductions and all of these exceptions that they added to it. That will make things very easier for everyone. And it means that this compliance part becomes very much simplified. That's one option. They can also make a new form, S2, whatever they're going to call it, which basically requires you to live up to the full form or the easy form, but just do it on a one-pager because that you have to comply with the requirements. Maybe they're going to do something in between. In all, anyone who has loans between 50 and 150,000, I wouldn't submit them right now for forgiveness. I will wait a week or 2 more until the 24 days have passed and they have to release this new form and then see what the requirements are. We can only hope that they have simplified it. But when we look at the actual law text, we cannot be guaranteed that there's going to be a simplification simply because of the way the Congress have written it. So your bet is as good as mine. Are they gonna make it automatic forgiveness, or are they still gonna require everyone to live up to full compliance with all of the 7 pages of the CARES Act that they're referring to here? So that's just a little bit example of how this process is working, and I know a lot of people are very happy for this, and we should be happy, and hopefully we'll get a simplification, but we don't know yet. The SBA might interpret it in a different way than what Congress actually intended. Good. So let's go to round 2. So to get a second draw, you have to receive money from the round 1. You have to have spent that money before the funds from round 2 is dispersed. Should be fairly easy. This actually raises a question that if you only got partial forgiveness, can you then apply for round 2? We'll have to get clarifications on that, but that is a question that is going to be relevant here. Less than 300 employees. It was 500 employees in round 1. And you have to have a 25% reduction in gross receipts in any quarter of 2020 compared with the same quarter in 2019. Then they have some additional changes. NEICS Sector 72, that includes restaurants and hotels, they get 3.5 times their monthly salary, whereas everybody else still stays at the 2.5 times. They did that because they recognize the hardships, especially of this sector. The maximum loan amount have been lowered from $10 to $2 million, and the payroll costs, again, the basis for how the loan is calculated can be based on either 2019 figures, 2020 figures, or the 12 months prior to when the loan is requested. So that means that we now can get into a discussion which period is best. You probably need to calculate all 3 periods to see which one gives us the highest average and then apply for that. Documentation requirements. So if you are applying for a loan over $150,000, then the documentation for the 25% gross receipts reduction must be submitted with the loan application. For under $150,000, it must be submitted later when the borrower applies for forgiveness or when the SBA requests it. This is again a typical example of simplifications that really doesn't matter, because who will want to take a loan without knowing if it can be forgiven? So I strongly recommend that anyone taking a loan, that they make sure that they actually live up to the requirements, because the requirements are unfortunately not trivial, which we're going to see a little bit later. Good. With that, let's go to the second poll. Sophia, if you can start that. And then we're going to answer some questions here. First one here. The lender for one of my clients was pushing to get the forgiveness application submitted before New Year's. Loan amount was $74,400. I don't know what the question is in that. If you can ask and actually say, give a question related to that, I'll gladly answer it. But generally, I know that a lot of banks have been pushing for getting people to submit the forgiveness applications as quick as possible. The reason for this is actually simple. Until the forgiveness application is submitted, the banks are spending their own money. So that's why that the banks were pushing a lot of people to get the application submitted right away. Simply because they and especially were interested in getting that money before the books closed at the end of New Year's. So it wasn't going to be a problem with their books for when they publish the annual reports. Good. We have a question here. Can self-employed with Schedule C request PPP? Yes, they can. They can even request for a second draw as well. Again, they have to have requested from first draw before they can do that. So if you have someone with a Schedule C that hasn't requested yet, they can only go for round 1. They can't go for round 2 because they simply deadline and spending money before it's over. Another question. I have a client that began operation on 1st of April 19 and received the first draw PPP loan. What are the options for comparing 2020 Q1 gross receipts to the second draw revenue reduction test? There are some rules they put into that and say, you know, you can do it in some of the later quarters and see if you had a reduction there. And there are some other calculations. I haven't included them into this presentation, but they have specific rules listed out for that. I can make sure that I send them to you. If client wasn't approved for round 1, can they apply for round 2? I'm actually fairly sure they can't. That's one of the additional requirements. They can't be affiliated with anyone, members of Congress or part of political organizations and so forth as well. And one of the requirements is that if you failed in round 1, then you're not allowed to apply for round 2 as well. Good. Let's share the results of our votes here. And we can see that again, many clients have needed help. It's not doesn't seem to be a 100% thing or even a 50% thing if I'm just reading the figures here. But it was it is quite a few who still have had to have help with this, which is kind of the picture that we're seeing as well. Good. Let me share my screen again here. That's that button. Good. So now we get to some of the more fun parts. How do we calculate the gross receipt 25% reduction? Well, 2 options how to do that. You compare your 2020 tax return to 19, assuming that you had the full year, which I'm going to send out to as well. Or you can have compare 1 quarter with the same quarter in 19. So this is a thing they put in to say, you know, this is to if your 19 tax return is lower than your 20, is 25% lower than your 2020 tax return, that means we can use this information because it means at least one of the quarters is going to be over a 25% reduction. But this begins to raise some question because I'm beginning to look at timing here and say if the tax return is ready in March and the deadline for applying is the end of March, it becomes a narrow window if there's issues and we are right in the middle of the tax return, tax season. So it's a concern that I got very quickly as I read through this, how they're putting this up, is in saying, how much is this going to stress out accountants during tax season? And that is definitely something that we recommend everyone to begin to consider. You know, if the clients are going to ask us for help, then things need to be a little bit different this year than they've been in previous years. Because what about tax extensions? If your application for round 2 is dependent on your tax return, if that's the approach that the client is taking, then tax extensions suddenly become less useful. At least for those people who want their PPP loans. So be sure that you are aware of this issue. Good. Let's give an example of how to calculate this. Gross receipts 50,000 in Q1, Q2 of 19, 30,000 of Q2 of 2020. The loss is 20,000, so it means that there's been a deduction of 40%, which means that they can they are eligible for the second draw loan. Okay, definition of gross receipts. Now I'm going to read out directly from the documentation that the SBA have released. And bear with me here, because I've seen there's been some discussions where the gross receipts ended up by some to be defined kind of as, the way the IRS is defining it, and ending up with being total income. And I want to debunk this simply because of what the SBA have written inside of the specifications here. They say the Economic Aid Act does not include a general definition of gross receipts for purposes of determining a borrower's revenue reduction. So the SBA is here saying, you know what, we're a little bit up to us. It's a little bit up to us to define how we're going to do this. Then they say subsection C2 of the interim final rule defines gross receipts consistent with the definition of receipts in 13 CFR 121-104 of SBA size regulations, because this definition appropriately captures the type of income that is typically included in a small business gross receipts. Moreover, this definition will enhance the administrability of the second draw PPP loan, because it is a definition already used by the administration and many small businesses. And you can go and look in the second draw information, pages 7 to 8. This is an exact quote from there. Now, the important here is this sentence: gross receipts equals their definition of just receipts, because the SBA already has procedures in place that deals with annual receipts. And they're saying, you know what, if we can use our definition of annual receipts and say that's the definition of gross receipts we're using here, then our life is going to be easy. This means it is not the IRS definition of gross receipts that is used. It is the SBA's definition. And this is a very, very important distinction, because these two agencies don't always see eye to eye on how elements are defined. And they certainly don't do that here. So I'm going to go through a little how the SBA defines this, because there are some quite interesting changes in it that can have an impact on how this is calculated. So again, we are going through the exact text of this time of note 9 on page 8 of the before mentioned document. Subsection C2 of the interim final rule generally defines gross receipts to include all revenue in whatever form received or accrued, in accordance with the entity's accounting method. So if you're using cash, use cash. If you're using accrual, use accrual. From whatever source, including from sales of products and services, that makes sense. Interest, okay. Dividends, rents, royalties, fees, or commissions reduced by returns and allowances. This is funny because dividends and interests are normally located as other income. So they have to be moved up to the total income for the purposes of this calculation. Generally, receipts are considered total income in the case of sole proprietors, independent contractors, or self-employed individuals. We're using gross income, plus cost of goods sold, and exclude net capital gains or losses, as these terms are defined and reported in the IRS tax return forms. Then they go on and specify what should not be included in gross receipts. Tax collected for and remitted to a taxing authority, if included in gross or total income, sales taxes, and other taxes, meaning income taxes that is levied on employees. Proceeds from transactions between a concern or consolidation group, between its domestic or foreign affiliates, and finally, any amount collected by an agent on behalf of someone else. And then they go to the opposite and say all other items, such as subcontractor cost, reimbursements of purchase a contractor makes at a customer request, So they kind of cancel each other out in the cost of goods sold and in the total income. Investment income, and finally, employee-based costs such as payroll taxes may not be excluded from gross receipts. When they use may not in a legal context, it becomes you shall. What was the exact word you used yesterday, Sophia, when we discussed this?
A prohibition.
It becomes a prohibition. So you are prohibited from excluding these from gross receipts. So it means you must have subcontractor costs and payroll taxes included in the gross receipts, which is an issue because they're not normally, well, sometimes subcontractor costs definitely there are, but this is an issue because it will make it difficult for many small businesses to calculate this by themselves out of the numbers they're just getting out of QuickBooks. Again, here's the source from where you can find this information. Now, I've been in a lot of discussions about this over the last couple of days. So I found actually the Code of Federal Regulations that they are referring to. And here I have underlined all differences. I'm not going to go through all of them. But it's interesting to see how that they are, what things they cut out and what things they left in. If we look at their definitions here, we can see most of the times when the SBA simply just talking about receipts in what they use for sizing, they convert that to gross receipts to fit the legal text, except in this second section where they apparently forgot to add gross in front of receipts. So there the text is actually unchanged. But as you can see, in all the other instances, receipts have been replaced with gross receipts. So again, this is just to show that this is the SBA's definition of gross receipts and not the IRS's definition we need to use. Okay, let's stop here and take a poll and also answer some questions, because I imagine there's going to be a lot of questions about this. So,
all right. I'm getting there.
Good.
My client did not have payroll in the first quarter 2020, but meets qualifications otherwise. Can you apply for revised PP1?
So I gladly handle this, but it becomes a little bit where one of the requirements for the first round is that you were in operation by the 15th of February 2020, or that you were in operation prior to that. So the first questions I'm going to have is your client, did they have payroll in 2019, and when are they registered as an active entity? Because if that's after February 15, 2020, then they can't. So all of the requirements, I only listed the changes to PPP round one, and that was one of the requirements for PPP round one already in the first round, and that hasn't been changed. But that's definitely something that needs to be looked into there if you have someone who didn't pay payroll in first quarter of 2020. Did they do that prior in order to live up to that requirement? That's probably the biggest question there. Okay, regarding the annual gross receipts test, do you only need to show a decline from over 2020 to 19, or does it need to exceed some other threshold? The threshold is 1 quarter has to be a decline in gross receipts of over 25%. I'm just here gonna share my, go back to a previous slide. The example slides we had here. So basically this is how they calculated. Look at your gross receipts across all 4 quarters, find 1 quarter where that quarter compared to the same quarter in 2020 has been reduced with more than 25%. If it's reduced with all of them are less than 25%, then you can't apply for second round. And that is why this definition on how to calculate it becomes so important. Because if you are right at the tip and you make a mistake, and they capture that at a later stage, it can be I don't know what the penalties can be, but I think they can be pretty bad. So let me share the results here. How many of your clients do you think will need money from PPP round 2? It's a little lower than the ones who received from round 1, and that is expected as well. That is why they did put in these hard hit requirements, as they also call it in the law. But it is definitely quite a few. Good.
We have one more question, couple more questions. Isabella says, client took payroll on December 19 and December 20th. So that's clarification from the other one. And then the next question says, I see nowhere in the bill that says that the first round PPP must be forgiven in order to apply for the second round. Only that the funds had to be spent on the applicable expenses on or before the application for the second round funding. So we read that as meaning that even none of the first loan is forgiven because you have spent the money completely on things such as payroll, rent, utilities, accounting, etc. You can still apply for second round.
So the way I read this here is, if you have someone who gets partial, because you're totally right. If you haven't received forgiveness yet, you're good. The question I come up with is, and this is probably something that the SBA would have to clarify, is that if you only receive partial forgiveness, you got a loan for 100,000, but you only spent 75,000 for eligible expenses, so you're going to pay 25,000 back. Are you then living up to if you only receive partial forgiveness, are you then living up to the requirement that you must have spent all of the funds before you apply for round 2? And my initial reaction is, that sounds dodgy. It's probably not, but let's wait and see. We have until March 31st, but it's one of those where it will be interesting to see if the SBA releases guidance on it, and it will also definitely be interesting to simply call up the bank once the bank opens up and say, you know what, we have this situation, can we still apply? Or simply just try to apply without asking the bank and see if they reject it, or whatever is going on there. Not telling you to try to commit fraud, but it's a very interesting situation if you don't get full forgiveness, and even if you wait with applying for full forgiveness, but you haven't spent the money, and you receive then the second draw money before you apply for forgiveness. It's something I would be very clear on what I was doing, so I did not end up in a pickle somewhere. I hope that makes sense. How do you document the 25% decline in gross receipts? What documentation is required? Well, that is actually a really fun question, because what the SBA is saying is you either use your tax return between 19 and 20, or any documentation that will suffice to give the documentation. So Thomas, I'm a little bit afraid there that we're gonna need a little bit more clarification from the SBA what documentation they will actually want. Do they want all of the total income bills, invoices that the business have been issuing between 19 and 20 for those 2 quarters in comparison, together with everything that would fall into the gross receipts? Or are they just taking a profit loss, or what is their thought there? They just say any documentation that will suffice to show that it has been reduced. I'm sorry, I can't give any more answer to that one. I am expecting to to get a further clarification on that at some point. Good. Let's go back here. So here we are. We'll just go down to where we were and pull 3. There we are. So we can't use the IRS definition of gross receipts. Gross receipts, the way they define it, or just call it receipts, is gross profit, total income plus cost of goods sold. And it must include interest, dividends, subcontractor costs, and employee-based costs, such as payroll taxes. Payroll taxes, again, is a funny, a little bit fluffy definition. Is that just state and local taxes, or can you include employer Social Security and Medicare there? I'm leaning to that it's probably only the unemployment taxes, because that's what we can only include in the forgiveness for phase 1. But and that's probably what I would only use until they give further clarifications. But it's a little interesting fact there. What are they actually meaning with payroll taxes in this here? Good. Now, when I saw this, I ran a little report across all the more reporting customers. I looked at anyone who had a subcontractor account and how was it classified inside of QuickBooks. 57% classify subcontractors as cost of goods sold, which is what we would expect. 40% as expenses and 3% as other expenses. So if we look into this definition from before, it means that 57%, the subcontractor cost is probably going to be the biggest expense post on those 4 we mentioned on the previous slides. And cost of goods sold is you know, if it's already included in cost of goods sold, there's a pretty big chance you can just use the QuickBooks profit loss at least to some extent. But for 43%, that's not the case. They will have to move these costs up into cost of goods sold before they make sure they get included before they report it on the application form. I honestly wonder why anyone would say other subcontractor cost is another expense. I think it's because sometimes clients, they like to make up their own chart of account, don't play by the rules, kind of make out their own rules. I think this might be a good example of telling him, you know, you should probably follow the standards. That makes it easier both for the SBA and your banks and me as your accountant and your CPA, by the way, to follow, to make you understand what your business, how it's performing, instead of trying to make up your own. It's just a little comment. So the problems that we see that comes from this is because there will be many instances where we can't use the profit loss in QBO, it has to be calculated by hand. That is going to be time consuming. And are the clients even aware of this if they try to submit this by themselves? How will the banks interpret the gross receipts? They should be better at it, simply because that if they are already offering SBA loans, it should be a part of the process they're already dealing with. I see 2 scenarios how this will go. Maybe there are more, but I see at least 2. The bank's underwriter spots the error, sends it back to the client. This goes obviously only for the loans that are over 150,000, where they have to submit all the documentation with the application to start with. Client then asks accountant for help and how to calculate it, because he's a little bit unsure how to do it himself. Accountant's in the middle of the tax season. Okay, that's a problem. That clearly is raising some time constraints. Scenario 2 is bank ignore the error or doesn't see it. Banks are not liable for mistakes in PPP. It's explicitly in the law. So if they make mistakes or they don't spot anything, you know, they don't have a problem. They'll still collect their fee from the SBA in processing these loans. Then the SBA, after time, either when the client submit for forgiveness or under the 3-year period or 4-year or whatever the thought is, since some documents has to be kept for 3 years and others for 4 years, I don't get it, but anyway. So for the 3-year periods following, they get submitted to an audit. Then they find the error and conclude that the client wasn't eligible for the loan in the first place. client then has to pay all the money back immediately, plus face some kind of penalty, which is listed what type of penalty you can in the form itself. This is a problem, and my biggest fear, especially for accountants here, is if we can't extend tax season and we have to go and help clients, how much stress is this going to make this tax season here? Its tax season is going to be different. How much help will your client need to apply for PPP round 2? Can we use the extensions in the same way that we used them in the previous years? And I would recommend you go through and all those of your clients whom you just said is probably going to apply for PPP round 2, make sure you contact them right away. Make sure that their bookkeeping is updated immediately, or at least very, very soon, because giving you a box of receipts on March 14th is not going to help if they want a PPP loan. It's that, because then they say we want the PPP loan, but then can you file for the extension? Well, you can file for the extension for 14 days before you submit the loan, depending on what method you're using in calculating it. So they need to be on top of this, and they need to make sure that their bookkeeping gets updated, or they will face an issue. I haven't written this in the presentation, but I'm a little concerned. Last round, it got released and all the money was spent within 3, 4, 5 weeks. And then they had to replenish the fund. But it actually went quite fast from when you applied to, you had the funds 3, 4, 5, 7, maybe a little bit longer, but it went quite fast. Here, the application process in itself, the documentation requirements is going to be, they are much higher, no matter how you twist and turn it. And it means people will have to be using longer time in submitting these loans. It means they can't get money as quickly as they did in round 1. There's no way they can do that. How many of them are going to go under while they sit and fiddle around with this? That's a concern I have. How long time is it going to take? I read somewhere that the SBA is gonna submit more of the applications for reviews. So is the SBA going to use a lot of time reviewing the 25% reduction requirements as we go along? It still is going to pull out the pain for many of these businesses who are experiencing a second round of shutdowns and need money right now, or rather yesterday. I'm not impressed with the work they've done here, because I think it's too much paperwork when people need help now. It's a little bit like asking a guy who just got a second heart attack lying on the road, can you please fill out this form to the hospital before we take you in? I can't write, I'm half dead. It's not pretty what they've done here. Finally, that's something that you will need to consider. You need external help to manage both the tax season and the PPP for this year. In any case, be sure you plan for it, because I'm seeing a very different tax season, and I'm seeing that if we just stress out, as happens many other years, and take if we don't plan for this and start planning for this right now, it's going to be very stressful this year. And I could see someone wrote that in the comments as well. Let's do the 4th poll and answer questions. Oh, that's going to be quick because there ain't any questions. So I'm just going to sit here, look at it getting filled out. Okay, this is I'll just let it cure a little bit more before we end the poll. Again, if you have any questions or any comments, we would love to hear them by now. We have one new message here. There's a question here. I had to join late. Is the recording available to be reviewed? Yeah, we'll be sure to include the recording as well. I am, at least I pressed the recording button, so I certainly hope that it's going to record it. Good. Let's end the poll here and share it. And we can see that definitely the majority is that we believe that your clients is going to need help for PPP round 2. And again, make sure you plan for that so you don't get stressed out trying to deal with both of these nightmares at the same time. Good. Then finally, I'm going to show a little bit how we do PPP inside of more reporting. We have a PPP forgiveness calculator. We'll make sure to adopt that to round 2 and also with the new expense categories that is coming in. We actually helping quite a few with PPP forgiveness applications ourselves. That's something that you guys can outsource to us. So this is a tool we actually use ourselves quite a lot, Sophia and me and some of the other guys inside of the company. How to deal with when we saw these requirements for the gross receipts, we were like, how can we do this in a quick way? And we figured out, hey, you know, we can use in more reporting, we can remap accounts. And one of the places we can remap them to is variable expenses. So I went into this client here, remapped their sales and marketing because I know that's where they have most of their subcontractor cost as a variable expense. And then I can simply go into a PPP round 2 eligibility report, change between, do I want to see gross profit or contribution margin? We have those 2 different reports here. I actually believe that is gross profit on the bottom and contribution margin on the top. And that way we can fairly quickly deal with these type of issues in more reporting. We have a solution for it already. And as I said, you can also, it is possible that you can get our help during the tax season to deal also with the application process. So you don't have to have that those 2 tasks on your table at the same time. And that leads us to the 5th poll, Sophia. I got some questions here in the meantime. Can a new S Corp with payroll only in December 2020 apply for PPP? No, they can't because they weren't in operation by February 15, 2020. So sorry, EB, it's very clear in the rule that in those cases that will not be possible. I'm getting a question here. We can deal with both QBO and QBDT as well. That we can definitely help with both. Good. I hope this has been informative for you. We're very glad to see all of you. I'm going to say here for the last 5 minutes, I'm going to keep the webinar open and I'm just going to answer any questions that come in. Can a Schedule C with the laws for 2019 apply for a PPP loan? I believe so. Yeah, I believe so. If the laws, if you can still document, well, the problem with the Schedule C is, of course, to document how much you paid out to yourself. But as long as you can document that, you should be able to get a PPP loan. Well, Shannon, you're very welcome. I will continue to monitor the SBA sites very, very diligently, and whenever we get updates, we're going to be sure that we send them out into the same newsletter as we send out the invitation for this. Our newsletter frequency kind of went down in 4th quarter of last year simply because there wasn't any news and election was going on and all kinds of other stuff. But now we are expecting to get news on a more frequent level. So we will return to sending out these newsletters on a weekly basis. to make sure that all of you are updated on how this is, how the SBA is dealing with this, and any news from their side. That being said, I am happy that they were able to get this done during the lame duck session of Congress, and I think that this help is very, very needed. We just need to be sure we can help our clients to get all of these funds. How can a loss on a Schedule C apply if there's no positive income? I have to go and read up on that. I haven't dealt with a lot of Schedule Cs directly. They're normally a little smaller than what we deal with, to be honest. But I know that there's rules for it. I saw that some months back, so I simply would have to go and look at how they deal with that, because I know that I do believe they did put down a way how to deal with a Schedule C with a negative. So we would have to look at that. For covered, another question here. For covered operating expenditures, can a company's forgiveness application now include costs incurred for accounting services for which a 1099 is issued to the single member LLC accountant? How about for cleaning service who also received a 1099 from the company? If you can argue that the cleaning service was necessary in order to combat COVID, it might be possible to argue that. It might be. You could also argue if it's a subcontractor, if it was a contract that was in place already before you got the loan, that probably we could probably put it into multiple categories there. It will be interesting to see if the bank says when we submit it, but I definitely think we might. I mean, if it's it won't be utility. I think it's, I'm like 60% sure right now that we can take and put a cleaning service in there under some argument. Good. Any other questions?
So we have one more question. The AMT to self-employer is after the fact, not as a deduction. The amount, there you go, to self-employer.
Yeah, so it's if we, I know that some have been using bank draws, and that's been a part in the past to show draws to yourself and use that as a basis for the even if for the salary basis to calculate the PPP loan from. If they only have the same bank account, both for their business and themselves, then it obviously becomes a little bit of a problem to use that approach. It's simply a way of seeing, can we find a way to document when it was done. Then another comment here, if the cleaning was done in prior years, it is not new now, indeed. But again, you might argue that I had to do that cleaning in order to make sure that germs of COVID didn't spread in my office or my restaurant or whatever. So that's why I'm like, can we push this into the COVID security part of it? That might be possible, but I would love to get the case and then study the rules in detail and see what we can come up with. But my initial thing is I think it's possible. I'm just not 100%, but I said it's 60%. I think we can do it. Good. So it's now 5 o'clock Eastern time, 3 o'clock here in Utah. We do have cold weather, nice sunshine. I can look out of the snow-filled mountain here, a snow-covered mountain. But thank you all for coming here today. As I said, I will send out information as soon as we get it. After this, we'll send out the presentation, the videos, and there's some of the how to use, how you can use the funds we're going to give in details, and also the rules for if you want operation in all quarters of 2019. I'll send them out separately as well. Thank you all for participating. We're glad you could join. Have a good day and talk to you again soon.
Have a good day, you all. Bye-bye.
Bye.